This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Businessweek Daily with Carol Massar and Tim Stenovec, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everybody. Yes, indeed. This is Bloomberg Businessweek Daily. On this Tuesday, April 21st, we've got stocks dropping. That really happened on a New York Times story that Vice President J.D. Vance's trip to Islamabad, for peace talks to end the U.S. war in Iran, they are on hold. So I got to say, stocks were already under some pressure and had erased some earlier gains, but this really sent them to pretty much their lows of the session. And oil, as predictably, it is higher, though, off its session high. Still $98 a barrel on Brent, WTI at $92 a barrel. Both of those up around 2.7% in today's trade. All right, we're going to get more on the trading in just a moment. When we come back, though, we're going to talk about that U.S. war in Iran. Where are we on negotiations? And then after day up on the Hill, is the president's pick for the next Fed chair, is it he basically getting closer to getting the job? Got some questions for our Mike McKee. Yeah, looking forward to that conversation in just a few minutes. Also, the Deputy CIO Solutions and Multi-Asset over at Morgan Stanley Investment Management ties all of today's headlines to the trade. We're also going to get to the core of what faces Apple's new coming in CEO. That'll happen in September. And then the president of customer experience over at Adobe on partnerships and surviving in an AI world. It's not been easy for any kind of software company. No, we got a packed hour right here on Bloomberg Businessweek Daily. First up, a check of the day's trade and top business stories. Here he is, Charlie Pellet.
Thank you very much. And developing political story right now. Headline on the Bloomberg out of Washington. Democratic Congresswoman Phyllis McCormick says she has resigned. That's according to a statement posted moments ago on X. Again, developing story headline right now on the Bloomberg Professional Service. U.S. equities lower across the board, bounce off the bottom, but still a lot of red on the screen. Looking at a 24-point drop right now on the S&P at 7,084, down 0.3%. Dow Industrials down 124 on the Dow. Decline there of 0.2%. Nasdaq lower by 61 for the Nasdaq Composite Index. A drop there of 0.2%. A rebound in oil driving stocks lower. Traders are awaiting confirmation that Iran will join the U.S. in peace talks. Also, we saw equities extend losses after the New York Times reported that Vice President J.D. Vance's diplomatic trip to Islamabad has been put on hold. The VIX just below 20 now with a 10-year 4.29%. Spot gold is down 106 the ounce to 47.14, down 2.2%, while West Texas Intermediate crude now up by 2.3%, 91.65 a barrel. Barrel of Brent 97.83, up now by 2.5%. Apple shares do remain lower today, down 2.4%. It is among the most actively traded, certainly among the most read stories on the Bloomberg. Apple declining a day after announcing that Tim Cook will be replaced by John Ternus as Chief Executive Officer. Again, Apple down now by 2.4%. Recapping the Dow, the S&P, Nasdaq all lower. S&P right now down 0.3%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. Tim and Carol, that is a Bloomberg Business Flash. All right, we're going to be talking, as Charlie mentioned, Apple. We're going to talk about that a little bit later on this hour with our own Mark Gurman. Meantime, we do have a headline crossing. Deutsche Telekom said to mull a full combination with T-Mobile US. So some news there. I'm looking at shares of T-Mobile. They are shooting higher as soon as that crossed the Bloomberg. Up right now, just about 1%. All right. We'll keep an eye on that for you as we count down to the close on this Tuesday. In the meantime, we just want to go back to that New York Times story that really changed the market direction. As we said, we were already off our best levels of the session, had erased earlier gains, but that's when we saw stocks take a dip to their lows of the day. What the Times published at around 1:34 p.m. Wall Street time is that, here's what they say. The delay is another hurdle in the Trump administration's push to secure an agreement that would curb Iran's nuclear program. So Vice President J.D. Vance's diplomatic trip to Islamabad, where he was expected to press Iranian negotiators for a nuclear deal, has been put on hold after Tehran failed to respond to American negotiating positions. This is according to a U.S. official with direct knowledge of the situation, again, from the New York Times. Ahead of that, President Trump said Tehran had no choice but to send a delegation to negotiations in Pakistan. The U.S. is in a strong negotiating position
he told CNBC earlier today, and is, quote, ready to go with the resumption of bombing if a breakthrough isn't reached. That's what Wendy was referring to. I think the question, Carol, is to what extent does military activity continue, and when does it, or I guess I should say start up again, if these peace talks don't happen?
Which is kind of wild, because I think investors are expecting we're not going to be having those talks anymore about escalation. Back with us is Wendy Benjaminson. We fixed our audio issue. She is, of course, senior editor for Washington, D.C. Weekends at Bloomberg News. Thanks for being patient with us, Wendy, as we work that out. You know, I do think investors, based on the trade, who certainly on the equity side of things, just keep kind of trying to grind higher after several records and a quick run up last week, that they, don't think that escalation could still come between U.S. and Iran. But based on what the president says, negotiating tactics or reality, we could see an escalation in the war.
We absolutely could see an escalation. And then again, it's Trump. We could not. He might come away. The deadline was technically tonight. And yesterday he said, no, it's Wednesday. So it's possible that if they're still trying, the Pakistanis are still trying to get the Iranians to the table, and they're still trying to decide whether it's smart for Vance and Witkoff and Kushner to go. Who knows? That deadline might get pushed back, another 24 hours or something like that. I think, remember that Trump politically needs to get an off-ramp for this war. And the Iranians have their own domestic reasons for maybe not backing off right away. And, so it's not really in anyone's interest for missiles to be flying. But it is important that these talks happen.
And perhaps shame on all of us, because we know the Strait of Hormuz and certainly the nuclear, the enriched nuclear piles. I mean, those are the negotiating tactics and really leverage, if you will, when it comes to Iran. We knew that this wasn't going to be easy. Wendy, thank you so much. Wendy Benjaminson, senior editor for Washington, D.C. Weekends. Tim, we're going to stay in D.C. We're going to go from kind of what the executive branch on the war is up to, and then we're going to get to what's been going on at the legislative branch today.
That includes hours of a hearing for President Trump's pick to be the next chair of the Fed, Kevin Warsh. Warsh repeatedly pledged to act independently if he's confirmed as the next head of the Fed. He rejected Democratic concerns he would, quote, be a sock puppet for President Trump, who continues to demand lower interest rates. Here he is, Kevin Warsh, earlier in an exchange with U.S. Senator John Kennedy, a Republican from the state of Louisiana.
Professor, what's a sock puppet?
I heard the reference from Senator Warren.
Yeah,
earlier.
what is it?
I'm not sure I know. Okay. I think it's that thing you stick your hand in.
Yeah, kind of like this?
Yes.
What's a human sock puppet? Isn't a human sock puppet somebody who'll do what somebody else tells them to do?
I think that's what the senator was trying to suggest. I think that was the innuendo.
Are you going to be the president's human sock puppet?
Senator, absolutely not.
Are you going to be anybody's human sock puppet?
No, I'm honored the president nominated me for the position, and I'll be an independent actor if confirmed as chairman of the Federal Reserve.
All right, that, of course, was Kevin Warsh earlier in an exchange with U.S. Senator John Kennedy, Republican from the state of Louisiana, with what you need to know about the hearing that went on for several hours this morning and into the early afternoon. Joining us right now in our D.C. bureau is Bloomberg TV and Radio international economics and policy correspondent Michael McKee. Mike, not a sock puppet, but basically the idea is that he's not a puppet of the president and will run the Fed, chair the Fed as he sees fit. Do you buy it?
I think you have to going in. He's going to be the chairman of the Fed at some point. And it would be very difficult for him to try to run monetary policy if he was seen under the thumb of President Trump. The question is, can he maintain that distance even if he's doing the right thing? Because there's no doubt that if he doesn't get interest rates to move lower over a certain period of time, he's going to hear it from the president. He'll go on Truth Social and say something about Kevin Warsh and his Fed. The issue for Warsh actually, though, is how does he do that? Because at this point, the economy doesn't call for it. And he's just one of 19 people who vote, or 12 who vote, 19 who are on the committee who make the decisions about interest rates. So does he... is he able to convince people to go along and cut rates? I think that's going to be a very difficult thing to do at this point because the Fed's pretty divided over the need to do that.
Mike, I think Anyone who tuned in to these hours this morning, suffice it to say, I think it was entertaining, to say the least. The question that I had throughout the process, though, was, does any of it matter if Senator Tom Tillis is there and says, I will not vote for this to move ahead unless an investigation is dropped into Jay Powell?
Well, a certain amount of it does, in the sense that it gave Wall Street investors a chance to get some idea of how Kevin Warsh is thinking about inflation and thinking about monetary policy. He's talking about possibly making some major kinds of changes in the way business has been done for a while, like perhaps getting rid of the dot plot. He's talking about shrinking the balance sheet, which would be a difficult thing to do, would take several years. And he said that if they do that, they want to make sure that it doesn't cause any problems on Wall Street. So those are things for investors to look out for, and that they would have to plan and prepare for. And as Senator Tillis said, at some point he will be the chairman. It's just a question of when the president decides to give up on the investigation. And it may be that if Warsh was impressive enough today that the president says, all right, let's just do it and get him in there.
Yeah, we'll see what happens. Standing by. Hey, listen, Mike, thank you so much. Michael McKee, international economics and policy correspondent for Bloomberg TV and radio out there in our Washington, D.C. bureau. All right, let's kind of tie all this in, because we have seen certainly some nervousness in the trade today. A lot of it has to do, Tim, on kind of the lack of peace talks between the United States and Iran.
Yeah, I want to bring in right now Jitania Kandhari, Deputy CIO of the Solutions and Multi-Asset Group at Morgan Stanley Investment Management. The firm has $1.9 trillion in assets under management. She joins us here in the studio. We've talked about war. We talked about Kevin Warsh. We haven't mentioned yet earnings, which we're in the midst of right now. AI spend, a big portion of our program, private credit concerns. What matters to you right now?
So I'll come back to DC, because I know you were discussing that, because I was at the IMF World Bank conference. And I think what really matters to me is that the market's priced for perfection, right? And yes, like, markets are used to 25 years of stimulus every time, whether it's COVID or global financial crisis. There's monetary, fiscal stimulus. So markets have that reflexity that, buy the dip. That's the mentality. And on the other end, when you're with policymakers, there are a lot of concerns. There are concerns that this is an energy infrastructure that is going to face issues. 17% of Saudi production's down, 40% of Kuwait production's down, LNG facilities are hit, desalination plants are hit. Yes, the market's thinking about oil intensity of GDP coming down and therefore the impact not being significant. But all of this, 1/3 of the 80 facilities that are damaged are severely damaged, and they will take 3-4 years to come up. So I think that's what matters, this disconnect between the reality and what the markets are pricing in.
Jitania, I'm so glad you went there. We didn't have time to ask Mike this, but the world's top oil traders warning that the ongoing closure of the Strait of Hormuz is increasing the risk of a global recession as fuel demand takes a hit. And they say at the 3-month closure of the waterway could trigger a worldwide recession, with the consumption hit so far most concentrated in Asia, but expected to spread as global prices react. We are getting to a point, right? Like you say, it's going to take a while to bring that back. The longer this goes on, the longer an impact. And I think there's lots of questions about what happens even in peace talks. Does that region kind of settle down?
Yeah, I think, the consensus again is that there will be a deal. There's a difference in opinion on whether it's 10 days, it comes in 10 days, or it comes in 2 months. But I think the deal or no deal, the implementation is the big risk. Because, you're talking about peaceful flow of energy and fertilizers through the strait. That's one thing. You can achieve some of that. But what does the nuclear enrichment technical details look like? When you have sanctions that are going to be phased out, what does that trajectory look like? And what does that implementation phase look like? Will Iran drag their feet? So I think deal or no deal, the implementation of whatever talks happen is a risk to me and is an issue.
Iran wants to be able to enrich. That's a message that the country has made clear. The U.S. does not want it to do that. There's still a lot of daylight between those two things. We don't know what a timeline would be for a potential deal, but how long, in your view, could the Strait, as it is right now, remain impacted?
Very tough question. I think we could have some settlement with some tolls and discussions there, but I do think that this is something where I worry about the implementation, and I worry about the supply that's already been out and will take time to come back. So as I mentioned, there is a lot of complacency in the market, and the other interesting, everyone's talked about implications and the multipolar world and how all of this is reinforcing that. But I think the new talk is about, weaponization of waterways, right? Mm-hmm. What does that mean? You have so many waterways all
China,
over.
right?
Go to China, $1 trillion surplus in trade that has happened with exports of goods. So what does that look like for, investors in terms of how do you think about that?
We've just got about 45 seconds left here. So do you believe, Jitania, that, we're going to see more conflict, whether it's over waterways, resources, what have you? Is this kind of our new way forward globally?
Yeah, I think it's a multipolar world. It's going to manifest in trade. It's going to manifest in AI. It's going to manifest in energy security. There are two ecosystems. There are AI in China, in US. There are two spheres of influence, the West and the East. China has been a winner in this, kind of not really confronting US and their energy infrastructure and their ability to help Asia kind of secure that energy supply chain's gotten even more interesting. So I think these have a lot of implications on just the whole multipolar ecosystem we are operating in.
Doesn't sound warm and fuzzy, that's for sure.
Opportunities exist.
There's always opportunities. Jitania Kandhari, she is Deputy CIO Solutions and Multi-Asset over at Morgan Stanley Investment Management. Thank you so much. Really appreciate it. A lot going on today, and you're tying it all together. Hey, coming up, we're going to get to a story that really caught our attention. It's all about Apple.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. Deutsche Telekom is considering a full combination with its American arm, T-Mobile, to create a multinational telecom group. The potential deal would create a single, simplified corporate group that controls the operations of Deutsche Telekom and T-Mobile. Deutsche Telekom is already T-Mobile's biggest shareholder with a roughly 53% stake. We're seeing T-Mobile shares now up by 1.2%. And among telecom rivals, Verizon up by 0.3%, AT&T little changed, up under 0.1%. A sell-off for the U.S. equity market with the Dow, the S&P, NASDAQ all in the red. We're off session lows, but still looking at a 40-point drop on the S&P. Right now it's 7,072, down 0.5%. Dow Industrials down 244 on the Dow, a decline of 0.5%. NASDAQ is down 105 for the NASDAQ Composite Index, a drop right now of 0.4%. The VIX right around 20 with a 10-year yielding 4.30%. The 2-year 3.78%. Gold right now down 2.6%, $46.93 the ounce, and West Texas Intermediate crude now up by 3.1%, $92.41 for a barrel of WTI. Brent, which was flirting with $100 earlier on, now at $98.50, higher by 3.2%. Again, recapping the Dow, the S&P, NASDAQ all in the red, S&P down 0.5%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pallett. Carol and Tim, that is a Bloomberg Business Flash.
Thanks so much for that update, Charlie. As we're speaking, headlines continue to cross. We have a headline coming from Iran's foreign minister, Arghachi, saying that striking a commercial vessel greater is a truce violation. He just said this in a comment on X, that blockading Iranian ports is an act of war. We're talking about the Minister of Foreign Affairs of Iran, Abbas Arghachi.
Yeah, and what's interesting is we are seeing equities, we are seeing them just off their lows of the session, but not too far from them. So we continue to see some headlines back and forth. But again, he's obviously talking about what's going on from the United States in terms of the blockade.
But the blockade was announced more than a week ago.
Right. But I guess the consistency or keeping it in place, that he's still seeing it as an act of war?
Yeah, and the backdrop, of course, is the lack of peace negotiations happening in Islamabad, as the New York Times reports that Vice President J.D. Vance's trip there is on hold due to those talks not actually coming to fruition, at least at this point.
Yeah, and forgive me if I'm repeating. Like you said, he said the Iranian foreign minister blockading Iranian ports is an act of war, thus a violation of the ceasefire. And then he goes on to say that striking a commercial vessel, and taking its crew hostage is an even greater violation. So this is talking about the ceasefire that we've seen that expires, that was extended, but expires tomorrow evening, as we've heard from the president. So we continue to see certainly the words of war going back and forth between the two sides. So we'll see ultimately what may still come throughout the day as we continue to keep an eye on it.
I'm keeping an eye, too, on what's going on with markets. Specifically, one stock that is in the red. It's the biggest decline on a points basis in the S&P 500 today, Carol, and that is none other than Apple. Shares down about 2.5% right now.
Yeah, trading, I think it's safe to say perhaps, I don't know, we'll see what Mark Gurman has to say. This is off of that news that longtime leader Tim Cook would be replaced by John Ternus, who takes the CEO job in September. Got to point out, as Mark included in a story, the company published an image of the two execs walking side by side at the company's campus in Cupertino, California. And as Mark wrote, both men are wearing Apple watches, dark button-up shirts, and blue jeans as they smile at each other, a near mirror image.
Do they have the same stylist, or like, how does this work?
Is there a uniform at Apple? I would assume wearing Apple watches makes sense. Reporting all of this out. And to be fair, Mark gave you guys all a heads up last month about who would be the possible and likely Apple heir apparent to Tim Cook. Here with us is Mark Gurman. He's Bloomberg News Managing Editor for Global Consumer Tech. He joins us from the LA Bureau in Bloomberg, or for Bloomberg. Mark, congratulations, because I got to say, that deep dive last month really laid it out why John Ternus made sense. So kudos to you. Why is he the smart pick? Is he really the smart pick for Apple?
Well, first of all, I want to comment on the stock drop. That's pretty interesting to me. I think investors don't really know why they're selling the stock. I think they've seen Tim Cook as a beacon of stability for 15 years. Obviously, the person who took Apple from this tragic loss of its larger-than-life co-founder Steve Jobs back in 2011 and took them to new heights. And so maybe they're scared about that, but I don't think that they are selling because they don't realize that Ternus is fairly junior. There's going to be a lot of work that needs to be done here. This is going to be a long transition. There's a reason Tim Cook is sticking around as executive chairman. There's a reason the other pieces that they've moved around, new general counsel already in place, new CFO already in place, new COO already in place. There's a reason all these chess pieces have been moving over the last year or two preparing for this. So certainly he has a lot of growing to do. But in the long term, I think this is actually a positive for Apple. John Ternus is going to take Apple to new product heights that Tim Cook is not able to take Apple to. John Ternus having full oversight over the company, being able to put his stamp across the company, will mean that AI is going to penetrate throughout Apple at faster speeds. Earlier this month, he reorganized the hardware engineering division in order to make it more AI forward and using data and using AI to help build products and improve product quality. He's going to introduce many game-changing new products over the next several months, the next few years. So I think it's a net positive in the very long term, but could be rough in the short term.
We'll talk more about the net positive and in the long term and the challenges in the short term in just a second. I think we do have a picture of John Ternus and Tim Cook that we're bringing up right now for those of you who are watching on TV and on YouTube and Bloomberg Originals. You can see them there side by side, which looks like a setting in California. Mark, I think the thing that surprised a lot of us was the timing here. Why now?
Tim Cook just finished up an all-hands meeting with Apple employees, and he gave them three reasons. One, the business is doing good. The holiday quarter was its strongest ever, obviously north of $140 billion. The product roadmap is stronger than it has ever been. Obviously, I've talked about the AI wearable strategy, the AI smart home strategy, the foldable iPhone, the 20-year anniversary iPhone. And he said Ternus is now ready. And so he said all those three things intersected at the right time.
Hey, as we did show the picture of the two of them looking so similar, is it good that it is somebody, that it's an inside individual who's been at Apple for a decent amount of time, a pretty long time? Is that a good thing? I mean, we know when they go outside, sometimes that doesn't always work out.
Well, that's exactly. It's not that it's a good thing, it's that it was the only option. The only person who could take over for Tim Cook at Apple is an insider, someone who's in the mafia, someone who's in the family who runs Apple. Apple really at the top is run like a small business, according to everyone who's really worked there in the senior ranks. And having the next member of the family step up is really the only way to move forward. An outsider would come in and probably destroy the thing, if you ask me.
What do you mean that Apple's run at the top like a small business?
Oh, either you're in the club and you have success there and you're making decisions, or you're out of the club and you're on the outs and you're not making decisions. And that is the reason why you've seen so many people come into Apple from the outside and either fail or get out of there in a very short period of time. Angela Arendt, the CEO of Burberry, came in there to run retail. There was speculation she could be the next CEO, but that was not going to work out. She was out of there in under 5 years. John Gianandrea, he didn't have the power, he believes, to make real change to their AI efforts. He was out of there famously for after 8 years, and Siri blew up in his face, and they missed on Gen AI, and there's a lot of controversy around that. And so time and time again, you see outsiders come in and not able to fit in with the top of Apple. I'm talking about Tim Cook. I'm talking about John Ternus. I'm talking about Phil Schiller. I'm talking about Greg Joswiak, Eddie Q, Craig Federighi. These are the people who run Apple and will continue to run Apple for the foreseeable future. It's a tight-knit group that's worked together for a long time, and they run the company they want, the way they want to run it. And there is no one who can stand up here and argue with the results, because obviously the results have been incredible. So they don't want to veer off of the way things have been going.
Mark, you said that John Ternus will be able to take this company, at least at a hardware level, to new heights. Critics might argue, and especially after reading your piece, that not all of what he's done with hardware has been a great success. Apple's Vision Pro, for example. So why do you think, and why do some analysts think that the best is yet to come when it comes to hardware?
Well, what I'll tell you is that he was not a fan of the Vision Pro or Apple's self-driving car work. He was not intimately involved in either. He believed both were a distraction. The biggest challenge for Ternus will be getting rid of this idea that they need to churn out refreshes to the products on an annual basis that don't necessarily have meaningful improvements or meaningful changes. I mean, for years, the iPhone, half a decade, looked the same every year. The Apple Watch, the iPad, the Mac, you name it. It's going to need to be a time where they're going to bring out new big hits, new categories around AI, and that's exactly what he's going to do. It's about sticking the course, staying the course, refreshing the current products, while also being able to usher in major new products. And we did not see that enough during Tim Cook's 15-year tenure. Obviously, we had the Apple Watch and the AirPods, very big products that any company in the world would, do somersaults backwards in order to have with their brand on it. But still, for a company that invented the iPad, the iPhone, the Mac, maybe some would have expected more. The Vision Pro was supposed to be that capstone product, but obviously that hasn't worked out for Apple. I do believe, though, that 5 years from now, it will lend itself to some sort of long-term iPhone replacement in the form of XR glasses. So we'll just have to wait and see how that works out under John Ternus.
Hey, when it comes to AI, we had a long, deep dive with Mandeep Singh of our Bloomberg Intelligence team yesterday, Mark. And one of the things he talked about, Apple has a lot of money, doing some kind of acquisition or acquisitions, especially when it comes to AI. Is that likely? Do they need to do that? Will they do that?
This has been talked about for 5 years now, even longer. Here's what I'll say. It's like an NBA team, right? I remember a team fired their coach. I'm not saying Tim Cook was fired. He wasn't. A team fired their coach, and then they promoted the assistant, right, the top assistant. And the head coach that was fired was asked, do you think things will be better, things will be different? And he was like, well, the guy who sat next to me the whole prior season, he's there, he sat next to me, and I'm not sure things are going to be entirely different, right? And so If Ternus wanted to make a big acquisition, I think he had the confidence from Tim Cook to make a big acquisition, and we didn't see that happen. So I don't think that Tim Cook stepping down, being replaced by John Ternus, especially with Cook remaining executive chairman, is going to heavily change their acquisition strategy.
Mark, just 30 seconds. Will Ternus be able to have independence to spread his wings with Tim Cook as executive chair? Very briefly.
Yeah, I think Tim Cook was pretty clear in his remarks to employees just about a couple hours ago. He said there can only be one CEO at a time, and I'll do what I'm asked to do by Ternus. I bet he sticks to that. I don't think he's going to pull a Bob Iger here.
All right, interesting stuff. And as we said, shares of Apple right now just down about 2.3% in today's trade. Mark Gurman, thank you so much. Bloomberg News Managing Editor for Global Consumer Tech. Hey, when we come back, we're going to stay on tech. We're going to stay out west. We're going to head to the Adobe Summit 2026. It's being held in Las Vegas, Nevada, and we're going to talk with the company's president of digital customer experience. We're going to talk a little AI. We're going to talk about how the company survives in a lot of AI. And all about their partnerships, because they've got a lot. That's coming up next. This is Bloomberg.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. Stocks lower as a U.S. official says Vice President J.D. Vance's trip to Islamabad for potential ceasefire talks with Iran has been called off and put on hold. The Dow, the S&P, NASDAQ all in the red right now. We're seeing crude oil higher. That's helping drive stocks lower. S&P right now down 31 at 7,077 on the S&P, a drop now of 0.4%. We've got the Dow down 216, Dow Industrials down 0.4, and NASDAQ down 85 for NASDAQ, a drop there of 0.4%. The VIX trading right around 20, 10-year 4.29%, with the 2-year 3.77%. Gold down $119 the ounce, just above 4,700 right now, down 2.5%. Crude, the big story, up 2.8%. WTI 92.13 a barrel. Brent 98.38, a gain there of just about 3%. So again, the Dow, the S&P, NASDAQ all in the red. Lots of industrial earnings today. Those companies are all lower. GE's first quarter profit did beat Wall Street expectations. Shares, however, moving lower. GE down now by 6%, also lower after earnings. We've got Raytheon, RTX Corp, lower now by 4.1%. 3M down now by 2.4%. So bottom line here, decline for a lot of those industrial names reporting this morning. And Deutsche Telekom said to be considering a full combination with its American arm T-Mobile to create a multinational telecom group. T-Mobile up 0.3 right now. Verizon up 0.1%. AT&T lower by 0.1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. Carol and Tim and Carol, that is a Bloomberg Business Flash.
Carol and Tim and Carol, we love you.
Cover all bases.
Charlie
right?
and Charlie. Doesn't get any better than Charlie and Charlie.
No, exactly. Hey, folks, earlier we did a search on Adobe on the Bloomberg Today. You came up with a bunch of stories on Adobe teaming up with or collaborating with IBM, Comcast, Dick's Sporting Goods. The Wall Street Journal noted yesterday that the company, Adobe that is, teaming up with Microsoft, Anthropic, OpenAI, NVIDIA. And they also talked about how Adobe's new AI agent to help boost customer engagement and sales. So there's a lot going on at this company, and they have a big event going on in Las Vegas, Nevada right now.
Yeah, and at that event, Bazinga noting that NVIDIA CEO Jensen Huang praised Adobe's impact, stating, quote, "No company, no CEO has ever made a greater contribution to how the world tells stories than Adobe." Joining us now from the Adobe Summit 2026 in Las Vegas, Anil Chakravarthy, President of Digital Customer Experience at Adobe.
Anil, so great to have you back with us. A lot of announcements being made. You know, it's an interesting time. We have tons of AI headlines coming at us, coming at you every day. I want to talk about these collaborations, these partnerships, and really, you know, the shift that you guys are doing to agents, agentic AI. We're talking about it so much. How does that going to change, or how will that change Adobe's business model, and how important is it going forward?
Well, thanks for having me on. It's great to be here from Adobe Summit. Over 14,000 people, the world's largest digital marketing and customer experience conference, and the energy is off the charts. Regarding the partnerships you talked about, it's a massive ecosystem that we are a part of and that we are helping drive towards the agentic world. All SaaS companies are becoming agentic software companies. And in our space of customer experience, it's traditionally been a mix of tools, automation, manual processes, in an area where enterprise customers, CEOs, CMOs, chief information officers have been looking for a solution that can really help them automate the end-to-end customer lifecycle and provide those kinds of personalized customer experiences to every single customer. And that's been hard to do before agentic AI. And so now with agentic technology, we announced what we call Adobe CX Enterprise, which is an end-to-end agentic system. That's exactly what you can do, is that one-on-one personalization at scale to every customer across the world.
So how does it change the business model? How is it going to the financial picture going forward for the company?
It's actually growing our TAM dramatically. I mean, we talk about how our total addressable market is now going to be north of $250 billion. So it's a vast market because every company in the world, whether it's a B2C company or a B2B company, cares about providing a superior customer experience. And now they can have the technology to be able to do that. And that helps them with their growth. It helps them with their customer satisfaction and loyalty, and also helps them take out costs in terms of the manual processes and tools that they have. And what we see happening over time is that our business model aligns with that of our customers. It'll align with the business outcomes that they're trying to achieve. It'll align with the business metrics that they care about. And we see a lot of our business model moving in that direction and aligning with their business outcomes and their business metrics.
Anil, investors are trying to understand how the rise of agentic AI changes the SaaS business model. So from Adobe's perspective and for Adobe clients, will they still continue to need a subscription to Adobe products and services, or will they be paying or looking to pay for projects or outcomes, just based on outcome, just based on deliverable?
It'll definitely be a mix of both. We see a lot of customers here. We have, customers here many of them are happy with the current model because it's very predictable for them. They know what exactly they're getting out of it, and they're getting business results from it. There are other customers who are saying, as they look at these new technologies and the pace of AI innovation, they look to Adobe to be able to bring that into the software that they already know how to use, whether it's Photoshop or whether it is Adobe Experience Manager. These are all great tools that they know how to use. They're saying, bring it in, your own models, but also bring in, we announced over 30 partnerships with AI companies like Google Nano Banana and others that we can provide through our solutions. And that's what they're looking for. They're looking for a mix of both, depending on what they're actually doing with the software.
One of the narratives that has emerged over the last year, at least when it comes to risks for SaaS companies, and you're all too familiar with this, having followed this closely, is that the rise of AI will somehow make it difficult or make it so these companies no longer need to pay for subscriptions, or at least seat-based models, because maybe they can get Claude to create exactly what they're looking for without paying an ongoing subscription for that. How do you manage the risk to seat-based model?
Yeah, lots of customers here. We've been in a lot of conversations, and the view that you just expressed is now what we hear from customers. A lot of customers think that that's way too simplistic to think that they would actually just use an AI coding tool to replace software. If anything, what they're looking at is saying, look, traditionally for software, we had to take software, we had to customize it to our own needs, and that involved a lot of work. And that work can actually be done a lot more efficiently with the AI coding tools. So they're looking at the sort of the last mile of using the software, making it perfectly tailored to their needs. And that's where they use a lot of the AI coding tools. And that's where their attention is. What is actually being done by the software companies, that actually has a network effect, that has the economies of scale, because we have over 20,000 enterprise customers, and we are taking the expertise we have from those customers and making that available. Any single company is not going to have that expertise, and they're not looking to replicate it. If you're a consumer products company or a bank or a healthcare company, you're not looking to become experts in digital marketing or digital customer experience. You want to get the best of both worlds. You want to get the expertise that you get from software companies, but you want the flexibility that AI offers to personalize it at scale to your customers. So they're getting the best of both worlds through agentic software.
And, legacy customers might get it, but I think about a new creative person. What is the reason to buy Adobe products when they can use free LLMs to create videos and pictures? What's the argument here?
Yeah, I mean, if you're anybody who is doing it for, let's say you are a creative professional or a freelancer, or you're even doing it as a gig, for example, you want to be able to get the benefit of not just the AI models, which obviously anybody can get. Then how do you differentiate yourself? That's where if you can bring the power of the AI models and then combine it with the capabilities that we provide, built over time. So if you can say, hey, through Photoshop, I'm able to access 30 different models. I can use that as the starting point, then I can add my own unique touch to it. That, again, you're getting the best of both worlds. And we believe that that's how you produce content that stands out. Otherwise, if you're doing the same thing out of the AI models, then all content is going to look the same. How are you going to stand out? And if you don't stand out, just putting content in front of customers, they're not going to click on it, or they're not going to take it to the next step. It's not going to be effective. So we believe that for content to stand out, you need both. You need the AI models, and then you need to add your own unique touch, your own brand to it to make it stand out.
Anil, always great to check in with you. We appreciate you taking the time from the Adobe
conference. We know it's busy out there.
That's Anil Chakravarthy joining us from Las Vegas, the president of Digital Customer Experience.